Assalamu alaikum. We should be getting started any moment. I would ask for all the children, can you guys please take a seat? And for parents, if you could ask that your children come and take a seat next to you. After our presentation, they could resume playing, inshallah. But let's respect the speaker and give him his due time, inshallah. So I ask for all the children to take a seat, and the sisters could make their way to the open area that we've opened up for them in the main prayer hall. Jazakumullahu khair.
Assalamu alaikum. Bismillah, alhamdulillah, wa salatu wa salam ala rasulillah. I want to thank the masjid and the sheikh for allowing us to be here today. They are not endorsing us, but they are giving us an opportunity to explain to you of what Islamic finance means in the United States and how UIF operates. Inshallah, I ask everyone to please hold all your questions until the end of the presentation, and inshallah I will take the questions regarding UIF and Islamic finance. My name is Wissam Berjawi. I've been working with UIF for 17 years. My title is Vice President of Sales, Eastern Division. Alhamdulillah, I've been with the company ever since it started from almost the beginning and seen the company grow throughout the years. Now, some of you may have heard of UIF, and some of you may have not. And so I want to do a little bit of a background on UIF so that you get an understanding of who we are. Alhamdulillah, we've done over $5 billion in residential home financing, over $150 million in commercial real estate financing. The company has been around for over 20 years, okay, and we are a private company. We are a subsidiary of a community bank, but we are not a bank itself. Now, as you can see here on the map, the colored states. The states that you see here are 32 states that UIF is operational in, right? The reason why we are operational in 32 states and not all 50 states is because our contracts are different than a traditional mortgage interest contract. So we have to make sure that our Sharia compliant contract works with each state, because every state has its own rules and regulations. Alhamdulillah, over time, we have become the #1 Islamic financing company in the United States with the support of community members like you who have used our service. Now, alhamdulillah, while UIF has started off as a home financing company, our mission and goal is to be the #1 stop for your Islamic financing needs. This is our goal, and inshallah we will get there with your support. And this is why UIF continues to offer more products. As I mentioned, we started off with just home financing, but we have grown to offer many other products. And the products that we offer are those that you see here on the screen. As I mentioned, residential home financing, commercial real estate financing, we have vehicle financing in certain states, and we have halal savings accounts. And this is one of the questions that many of you may have is, where do you get your money from? So one of our sources of funds is community members like yourselves that open up halal savings account, and we use these funds in order to fund our transactions. So these are the products that UIF offers. To go into a little bit more detail on each product, when it comes to residential home financing, this is a property that is from 1 to 4 units. It can be a home that you are going to live in as a primary residence. It can be a second home or an investment property. So if you're looking to purchase a residential property, we would be able to assist you. We can also do refinancing as well. So if you have a traditional mortgage or you have another Islamic financing company, you can refinance. Or if you have equity in your home and would like to cash out, you can do so as well. All of this within the residential transaction. When it comes to commercial real estate transaction, we do commercial real estate properties, which it could be a 5-unit or more residential property. It can be a shopping center, a medical office, a car wash, a masjid, an Islamic school, and so on. So we are able to finance the actual real estate part of it, not the business financing. So we don't do business financing, but we do the actual real estate part of it, okay? And then the next product that we have is vehicle financing. We do not offer vehicle financing yet in New Jersey. Currently it is in Michigan, Ohio, and Illinois. And inshallah within the next month we'll be in Texas. And then hopefully early next year, 2025, we hope to have it in New Jersey for vehicle financing, because this is a product that is very much needed now, especially with car prices being very high. Many of the manufacturing rates that they had before 0% are all, most of them are gone. So this is a great product to use if you're looking to purchase a vehicle in the future. We do finance up to $125,000 per vehicle. So inshallah, once we are operational in New Jersey, we will also let the community know as well. Now, as I mentioned earlier, many of the community ask, where do you get your money from, right? Do you borrow from the bank? So if you borrow from the bank, then what is the difference, right? If you're dealing in interest or not. This is an excellent question. And alhamdulillah, we do not deal in interest before our transaction with you or after. And this has been reviewed by our independent Sharia Supervisory Board. We have private investors that have invested in UIF, and we also have the community such as yourselves that are opening up a halal savings account. So when you open up a deposit account with us, we use this money in order to finance transactions, residential homes, commercial real estate, or vehicle financing, as I've shown you before. And then we give you a percentage of profit back. So it is a profit sharing account, okay? So this is a way for you to earn a profit in a halal way, instead of having your money, let's say, in a zero checking account so that you don't receive any interest. Now, the way that the savings account is, here's a little bit about the program as well. But from what you can see here, in general, the savings account, you could open it up with a minimum of $500 or up to $2 million. The deposit account, you will get access to an ATM card. You can take out your money at any time. You will still get also mobile banking. So if you wanted to transfer your funds from UIF to your local bank, you could do so. You will see all of your transactions. The profit sharing is paid monthly as well, so you will see that. Because it is held in a deposit account, it is government FDIC insured up to $250,000 for an individual account. And if it is a joint account with someone on there, then the FDIC goes up to $500,000 to cover you. So this is with our savings account program. The savings account program, you can put money in at any time, and you could take out money at any time. We have another account called a time deposit account, which is very similar. We invest in the same products, but the only difference is that with the time deposit account, you say that you are going to invest with us for 1 year, 3 years, or 5 years. So you're investing a little bit longer, but your profit that we're going to be sharing with you is a little bit more. So if you are not sure, I would go with the savings account program. That's what I have. My wife, my mother-in-law, sister-in-law, we all open up the savings account. My dad is more of a long-term person, so he went with the time deposit account. So either one, it's a great product to have, especially with the community having money on the side. the savings account, you can use it at any time as well. Now, when we get into the products in terms of Sharia compliance, how does the product work? Right, so part of this presentation, I want to educate you on how it works and then take questions as well. Many of the times people will say, Brother Wissam, what is the difference, right? At the end of the day, if you are financing a house with UIF or a traditional mortgage company, the end result is going to be the same. So if the end result is the same, what's the difference, right? Good question. But as we all know from an Islamic perspective, the end result is not what makes a transaction halal or not. It is the process as well. Okay, I'm going to give you a few different examples and then get into our product as well. First off, for example, if I were to tell you that after this presentation, I cannot stay long because I have to go home to my wife and kids, you'll say, okay, Wissam, I understand, no problem. But if I tell you I cannot stay long because I have to get home to my girlfriend and kids, what would you say? Astaghfirullah, right? Rightfully so. But what is the difference? The Aqd al-Jawaz, right? The marriage contract. But everything else is going to be the same. You're going to go home, you're going to inshallah have the same happy times, the same noise from the kids jumping, and the same bills at home, right? But one is halal and one is not. Give you another example. A few years ago, I was traveling overseas, and at that time I had my 2 little girls, and I brought gold bracelets for them. So I came home. When I went home to give it to them, it was too small. So I'm not going to fly back overseas to go exchange the gold. I went to a Muslim jeweler. The sister said she would buy my jewelry bracelets, and I said, okay, that's great, but I want a replacement for them. I don't want the money for it. I want to give my daughters the bracelets. So she said, okay, well, let me see what you have. And she said, okay, I'll give you $1,000 for those bracelets. I said, okay, great, but I want bracelets instead. She said, okay, well, take a look, see what you like. And I saw what I liked, and she weighed them, and she said it's $800. For the one I wanted was $800. The one that I was selling her was $1,000. Normally what would happen is we would swap out, and she would give me $200, right? But that's not what she did. Why? Because from a Sharia perspective, you cannot trade in something inferior for something superior. So, what did she do first? She purchased my bracelets for $1,000, gave me a receipt and gave me the cash. We were done with that transaction. And then she rang me up for another transaction for the purchase of those bracelets. I gave her the $800. She gave me a purchase receipt, and I still had $200 left in my pocket. And that is the right way of doing it, right? Both would have ended up the same, and we could have skipped a step. But we didn't, because that's not how it's done if you want to do things the right way. So keep that in mind, inshallah. We'll go through the product, our particular product, on how it works, but the process and the paperwork is different with us when you finance your home with us. Okay, very important. There is no interest contract that you are signing with UIF. You are signing a partnership agreement with us. And alhamdulillah, we have great scholars that have reviewed our program from beginning to end to make sure that our products, all of them, are Sharia compliant. And if you look over here on the board, you will see these scholars. And these scholars, they are Islamic finance experts, not just a sheikh in general, but they specialize in Islamic finance as well. And you'll see here, you have Mufti Abdullah Nana, you have Sheikh Nizam Yaqubi, the late Professor Sheikh Hussein Hamid Hassan, Allah yarhamu, and Dr. Abdul Bari Mash'al. If you go online, just Google them, you'll see a list of their bio that, mashallah, is extensive. So we went to scholars that are world-renowned in these topics. Some are local in the US, and some are on international boards as well. And then on my left over here, well, still to my right, but you will see other imams that have used our product to give you a sense as well of comfort, right? So this is something important as well. When the imams are using our products, we also are encouraged to continue to do so as well. And go on our website, myuif.com. You'll get a greater list of scholars that have used our program. Now, this is how our program works. Okay? We use what is called the Musharaka model. Musharaka is a partnership model. And in this model, you will find a home. We will purchase the home together with you at closing, and then you will buy us out over a period of time. For example, let's say the house is $100,000, okay? And I know there's no home you're gonna find for $100,000 here. But let's just say, for example, the house is $100,000, and let's say you're gonna put 5% down, UIF will purchase the other 95%, and then you will make a payment every month, and part of that payment will go towards buying out our ownership share until you are 100% owner of the property. For example, you're making a $1,000 payment every month, and part of that payment buys out our share. So now you have 6% ownership, 7%, 8%, 10%, 20%, 50%, 80%, until you become 100% owner of the property. So every month you gain more ownership. While you are gaining more ownership every month, you are also using the house completely, and part of it is what we own, right? So in the first example, you put 5%, UIF owns 95%, but you are going to use the house 100%, right? So when you use the house, you're using our share of the home, and so we make a profit through rent. This is how we make a profit, which is through a rent of using our portion of the home, okay? So instead of dealing in interest, we make a profit through ownership of the home, and from the rental payments, this is how we make a halal profit. As your ownership goes up, the rental amount goes down, right? Because as you have more ownership in the home, then the profit or rental part goes down. For example, once again, a $1,000 payment, and let's say $300 goes towards buying out our share in the first month, and $700 goes towards the rent. Next month, you have 6% ownership, for example, and UIF has 94%. Your monthly payment is still $1,000, but instead of $300 going towards the ownership, let's say it's going to be $305, and the amount that goes towards the rent is not $700, but it is $695. So your monthly payment stays the same, but more goes towards buying out our share of the home, and less goes towards the rent. So this is how our program works. It is based on the Musharaka model or partnership model. Now, when purchasing a home, there are a few steps to consider. First and foremost is to get pre-approved or get pre-qualified, okay? So you will give us a call. You will speak with the brother that I had passed around his cards. His name is Mazer Ramadan. Mazer is local. He lives in Parsippany, not too far. I'm actually based in Marlborough, not too far from here as well, about an hour. And we have an office in East Brunswick, okay? So we are local to New Jersey. You will speak with Mazer. He will get you pre-qualified, give you a pre-qualification letter. You will use this letter to shop around for a home with a real estate agent. Any agent you want, you can work with. If you need a referral for a real estate agent, let us know. We've worked with many, and we can refer some of them to you. After you have shopped around for a home and then have a signed sales contract, you'll come back to us, and then we will collect certain documents from you, pay stubs, bank statements, and so on. And then our underwriter reviews the file, and then generally within 30 days is the closing. So that is the timeline roughly. So most closings are within 30 days. Now, in this slide, I'm going to tell you what we look for in terms of qualifying, okay? Very important. How do I qualify? So I'm going to ask a few questions along the way. So the first thing that we look for is your income. And the income is what you show on your tax returns, okay? So keep that in mind. So, for example, for every $20,000 to $25,000 of income, you may qualify for about $100,000 in financing if you don't have any liabilities, no car loans, no student loans, no credit card debt. Okay, so every $20,000 to $25,000 of income, you may qualify for about $100,000 in financing. So if I'm looking to finance a property for $400,000, what should my income be around? Correct. Between 80 to 100,000 should be the income. And there's a range. The reason why there's a range is that your total payment is factored in. So some areas, property taxes are higher than others. Perhaps you are purchasing a condo, and condo has an association due. So all of that gets factored in. So if your taxes are lower and there's no association due, then maybe $20,000 for every 100,000 may work. If not, maybe 25. It all depends. But that is a good gauge to go with. Now, if you are self-employed, we take your net income, okay? And if you are W-2 employed and you don't have ownership in the company, then we take your gross salaried income, right? So if, let's say if you're an Uber or Lyft driver, you made $120,000 with Uber or Lyft, but after all of your expenses, you show only $20,000 of income. So then, generally speaking, we would have to take the $20,000 of income. Now, those that are in the transportation business, there are some expenses that you claim that we can add back, like depreciation or business mileage. You drove a lot, and so the IRS will allow you to deduct certain mileages. We can add some of that back to your income. So instead of $20,000, I've seen it go up to $60,000 or $70,000 back again, okay? Or you may need to get a cosigner, someone who has good credit and income and not too much liability, then you may qualify that way as well. Or if you are purchasing a multifamily home, 2-unit, 3 or 4-unit, you can also use rental income to qualify, okay? And once again, if you are employed, you work for a company, then we take the gross amount or salaried amount in order to qualify. So that is with regards to income. Second, we look at your credit score, okay? The higher the credit score, the lower the down payment, and the lower the credit score, the higher the down payment. On a single family home, the minimum down payment can be as low as 3% down on a primary residence. And on a multifamily home, 2 to 4 unit primary residence, the minimum down can be as low as 5% down, okay? Now, as I was mentioning, primary residence. Let me explain to you what different occupancy type means in the real estate industry. There are 3 types of occupancy. There is primary residence, second home, and investment property. Those are the 3. Primary residence means the one who applies for the home financing is the one who's going to move into the property within 60 days and is going to live there for at least 1 year. That is a primary residence, okay? Second home is the one who is applying for the financing, is going to live in that property several months out of the year. An investment property is everything else. What is everything else? Could be that you're going to rent it out. It could be you're going to have your sister live in the home. It could be that you're going to have your cousin live in the home. Your son is going to college, and you want to buy a property or apartment for him to live in, and he's not on the application. It's an investment property, okay? So you have primary residence, second home, and investment property. So, for example, if I'm purchasing a property in Florida, and let's say my wife and kids are going to go move to Florida because it's nicer weather over there when there's no hurricane, okay? Is this a primary residence for me, or second home, or investment property? I heard second home and I heard investment property. So they both could be correct. I would lean more towards a second home than an investment property, but both could be correct. But at least you got it right that it's not a primary residence. That's the main thing, okay? So I will tell you the difference. Second home, okay, so in all of these single family house, 2, 3, or 4 unit home, if I'm buying a primary residence or a second home, I can get gift funds. So I don't have any money. Wissam wants to buy this home for $400,000. He's putting 5% down. That's $20,000. And let's say I need about $10,000 in closing costs, so now I need $30,000. Wissam is broke. He doesn't have any money, but he has to buy this home. So he gets gift funds from his family members. His family members will write him a check, a personal check, and then I will deposit it into my account, and then I will sign a gift letter. They will sign it as well, and it says that they are giving this money as a gift, and they are a family member, cousin, uncle, brother, mother, brother-in-law, sister-in-law, father-in-law, and so on. Primary residence, second home, you can get gift funds. Investment property, there is no gift funds allowed. Why? Because no one is going to gift you money for you to buy an investment property. They may lend you money, but they're not gifting it to you. So that is the difference between primary and second home and an investment property. So primary residence could be as low as 3 to 5% down. Second home and investment property on a single unit, minimum down is 15% down, okay? Because they are greater risk. Investment property is the greatest risk. So you may say, well, what if I'm getting rent? Well, yes, if your tenant is going to pay the rent, and oftentimes the tenant may destroy the home, or if a person is having financial difficulties themselves and everything is going well with their investment property, they may take the money from that investment property and only pay their primary mortgage, right, because they need a roof over their head, and let the investment property go. So this is why there are different guidelines when it comes to second home and investment property. So I wanted just to explain to you how that works so that you have an understanding of the difference. And I wanted to highlight some of the advantages of UIF. Alhamdulillah, as I mentioned, we are the #1 Islamic financing company in the United States for great reasons. Alhamdulillah, it is a blessing from Allah subhanahu wa ta'ala. And we are able to serve the community as well. We want to make sure that we give you the best customer service possible as well. One of the things that I don't like ever hearing is that, if you deal with Muslims, you're not going to get the service you deserve, and you're compromising, and so on and so forth, right? I truly don't like that, because we always strive to be the best, right? Does that mean that we're perfect? Absolutely not. We make mistakes at times. And when we do make mistakes, we work on improving it and fixing it as well. One of the other things is that we are amongst the lowest once it comes to Islamic financing providers, right? I've learned throughout my years that everybody is Sharia compliant until it costs $1 more, right? And so if we are not competitive in pricing, then people will go elsewhere as well. So once you compare us to other Islamic financing companies, we are amongst the lowest. And when you compare us with traditional mortgage companies, our pricing is in the middle. You'll find some that are higher than us, and you'll find some that are lower than us, right? But alhamdulillah, we do our best to be as competitive as possible. We also give back to the community. There's many sponsorships that we do for local events. We have an Imam's Generational Scholarship, where we give up to $50,000 of scholarship money for the children of the Imams, so that they can go to college every year as well. And last but not least, we do our best to give no extra fees, right? So other Islamic finance companies, they have monthly fees that they charge on top of their profits. So these monthly LLC fees that they charge is to make additional profits. With UIF, we don't try to deceive you. We are giving you, as low as we can on an everyday basis, in order for you to, inshallah, to focus on moving into the house as well. And this is why, alhamdulillah, we have been ranked #1 9 years in a row by Islamic Finance News magazine as well. And we hope that, inshallah, we are ranked for the 10th year, which has just opened up as well. And then, as I like to say here, Sheikh Google, right? When you go to a restaurant or somewhere, you always check out the reviews. Alhamdulillah, we have great reviews, and we want to continue that. And as I mentioned before, wherever we fall short, we always want to improve upon that as well. And this is why, inshallah, we want to ask for your support. And if we could be of any assistance, please let us know, inshallah. And I will open up the floor for questions regarding our program. And I also have Brother Mazer's contact information as well. So we'll take questions from either side, the brother or the sister side. Yes, and you can turn on the lights if you want now that the halal movie night is over. Yes, I will go with him inshallah first, and I'll try to answer all of the questions. Yes, brother. Alhamdulillah. So the East Brunswick is not a deposit branch. It is our mortgage office over there. Okay. Our branch is located, or our parent company's branch is located in Michigan. Okay. But you can get your funds from a variety of different ways. If you have a savings account, you have your ATM card, and you can access ATMs anywhere. We are part of a network called All Points. So if you Google or go on All Points website and type in your zip code, it will give you access to all of their ATM machines, and there's no ATM fee for that. And then you can always ACH transfer money in between. So you go online, you go into the mobile app, and you could transfer between. So like I just did, to be honest with you, 2 days ago, transferred some of my money from my savings account to my local bank, all right, because I needed those funds. So I just did that 1, 2, 3 online as you normally would do, and it takes about 2 days for it to transfer between each one. So you can do that. And then you also can wire your money across either way. So those are the 3 main ways of transferring your funds or withdrawing funds as well. And it is an ATM card, but it's not a debit card, just to be clear. ATM card, you can take your money out at the ATM. Debit card means you can charge with it. You cannot charge with it. So just, to be clear. Yes, brother. Sure, it's a very good question. So the brother's question is that, can he take out money from his 401k to use as a down payment to purchase a home to live in? And the answer is yes, he can do so. We have many people who do that as well. We just need what's called the terms and the conditions of your withdrawal, which means I'm taking out $20,000 to purchase a home, and I'm going to pay myself back $70 every pay period, for example. So that's how it would work, but yes. And same thing with stocks. If you have stocks or crypto, people sell their stocks or crypto, then they transfer their funds to their checking account, and where that should be sufficient. Yes, brother, I'll come to you in a moment. Yes. Mm-hmm. Mm-hmm. Sure. So the brother's question is regarding refinancing. So if you have a traditional mortgage or an Islamic finance company, yes, you can refinance. What we would do is do an appraisal based on today's value. So let's just say the value is worth $500,000 and you owe $300,000. So we would have $300,000 worth of share or 60% ownership, and you would have 40%. You can do so. The terms vary. We do have 10-year, 15, 20, and 30-year terms. So you don't have to go back to a 30-year. You can go with a 10-year or 15-year. There's also no prepayment penalty, okay? So if you go with a 30-year, 15, 10-year, whatever the case is, and you want to make extra payments, you can. The extra payment can be an extra $50 a month, $200 a month, extra $50,000 once a year. You can do so at any time. Anytime you make extra payments, it'll help buy us out sooner, saving you time and money. So instead of a 15-year, it can be 5 years or 2 years and so on, okay? And you can automate the automatic payments as well. Yes. Yes. Mm-hmm. 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 Sure, it's a very good question. So we don't lend you any money at all, okay? We have, at the time of closing, you don't sign any interest promissory note. That's what you would normally sign with a regular mortgage. You know, they say they lend you $100,000 plus you promise to pay them 5% interest, right? So it's purely a lending transaction. With us, there is no lending transaction. It is a partnership agreement, and that is what you sign at closing. It is a partnership agreement, and that gets also recorded in the county that represents our ownership with you, okay? And another clear difference between us and a traditional mortgage, because we don't lend you money, is this is what's called a non-recourse contract, okay? Let me explain to you what that means. You go to the bank, you want to buy a house, $100,000, you sign an interest promissory note, you promise to repay them back the money, right? What do they have as collateral? The house. But what's your dealing with them? A loan for $100,000. Let's say something happens to the house and it sells for, it gets destroyed, right? And insurance gives you $60,000, $50,000, or you sell the house at a loss at $50,000, but you owe them $90,000. So the bank will take the $40,000 or $50,000, and we will too, to be clear, but our relation with you stops. What the bank will do is they will come after you for the difference, the $30,000, $40,000 that you owe them. Why? Because you promised to pay them back the money. With us, our dealings with you is into the home. And because it's into the home, if there's no more home, there's no more relationship. Okay? Mm. Mm-hmm.
So let's say the house will cost $100,000.
Mm-hmm.
Whoever the owner want to sell it for $100,000.
Mm-hmm.
So you are, let's say I pay $10,000 down payment, so I'm now 10% ownership and you are 90% ownership.
Mm-hmm.
Was the $100,000 or more?
So our transaction with you is based on the initial transaction, okay? So if I'm understanding your question correctly,
What is the profit you make?
our profit that we make is on a monthly basis, right? When you are using our share of the home. So we make it from the rent, okay? So let's just say, once again, if we have a partnership, we buy the home with you and you buy out our share over time. So if you put, let's say, 10% down, UIF puts 90% and we co-own the property together. But we own 90%, but you're using the house 100%. So every month you make a payment. The example I used was a $1,000 payment every month. Part of that payment is going to go towards the rent or the profit we make for using our share of the home. So the profit we make is on a monthly basis. That's the only profit. Now, if your question is, if I'm understanding it correctly, if the value goes up to $150,000, for example, and we own 90%, do we share in that 90%? And no, the answer is no, because our profit is only on a monthly basis. You are going to keep whatever profit the house goes for in the future.
Question from the sister's side. So the question is the partnership agreement only on the value of the house? For example, if you guys have like a 90% ownership of the house, like in the previous example, but there are like, you know, tax like payments and stuff like that.
Mm-hmm.
So would you guys have a share of those sort of expenses since you guys are the majority partner, or is that all on the person, of course, buying the house?
Sure, absolutely. It's a great question. So our partnership is based on the financing of the house. So we don't share in the property taxes and home insurance. And the reason is this. The property taxes goes towards the homeowners. Why? Because when you pay taxes, it goes towards the schools, the roads, the police department and such. You are using the house, so you will be benefiting from it. And to be clear, when we say partnership, right, many people think a partnership is a 50-50, right? Partnership is not a 50-50 always, right? There are different types of partnerships, and depending on who's doing what. I use the example often of, for example, if you're buying, let's say, going into business. Let's say I want to open up a halal pizza shop, right? So me and Omar want to open up a halal pizza shop. He has the money, and I know how to make pizza, okay? So he says, okay, he's going to put in $100,000 for the business, and I'm going to run the business, right? I know how to run the pizza shop, but he has the money. Doesn't mean we're 50-50, because we're both not doing the same thing. We may have a different agreement. We may have a 50-50, we may have a 75-25, and so on. Similarly, with our partnership, It is specific towards real estate financing, which is different than a business partnership as well. Yeah, I'm going to take the brother back there, inshallah. I'm sorry? Thank you.
Okay.
Yes, Brother Ahmed. There. Mm-hmm. Mm-hmm. Sure. So I'm going to answer that a few different ways because depending on the situation, we may or may not share in that loss. Okay? So when we get into a contract with you, the brother asked the terms. We have 10 years, 15, 20, and 30-year terms. And so our promise to you is that we're going to stay a partner with you for that amount of years, right? And your promise is, to buy us out over that many years. Now, if you decide for whatever reason not to buy us out, then eventually the house will go into foreclosure, and I'll go into another question afterwards, and we won't share in the loss. Okay, so let's say it sells for 40 or 50, you said, 50. We're going to take the 50, and you won't get anything, and we will take the loss on if the house sells for less before the time is due, number one. Number two, if there is something that happens to the property that is no one's fault, a fire, a flood, a government domain, the government wants to take the house because they want to build the road or expand the school, then we will share with you whatever it is, like you said, 10/90, 50/50, whatever ownership, because that's no one's fault. Okay. Now, yes, you have in some cases home insurance, right? To be realistic, home insurance will cover. Sometimes home insurance doesn't cover, right? You see sometimes in the news, you know, these couple, unfortunately, you know, they don't have flood insurance or they didn't have a hurricane insurance. In that case, we would share with you in that loss, right? Because it's no one's fault. So this is why my answer varies depending on the situation. وإياكم.
And I guess my question would be, sometimes with traditional banks, after they give you like a certain mortgage agreement and there's like an interest rate and everything, what will often happen is then the bank would then sell that debt to like another institution, and it gets put into like a bigger, you know, kind of like security or something like that. So the question is that something that UIF might do, where that debt might be then transferred to an outside institution?
Sure, it's a very good question. So, one is that there is no debt in our contract, right? So right. So if we lent money, then yes, we would be selling the debt. That would be correct, but we don't do that. But there could be investors that we have that yes do invest in our ownership share of the property. So that 90%, we may have investors that buy out our share. Similar to, let's say, if you buy stock in whatever company you want, Apple, IBM, and whatever, we can buy and sell our share of the property. So yes, the answer could be yes. Or sometimes we hold it on our books. We have both. Why do I say we hold it on our books? Because, as I mentioned earlier, we have our deposit accounts, right? So then we don't need the investors. So then we share the profit with you from that perspective. But keep in mind a few things. Even though if we have investors that invest in the contract, the terms and the condition of the contract do not change, right? Number one. Number two, what is different with us than almost any other company, mortgage company out there, I would say 99% of the other mortgage companies, Islamic finance or even traditional, is that we have a sister company that is called Midwest Loan Services that is owned by our parent company that services the contract. What does that mean? So after the closing, someone is going to collect your payment, okay? Your payment for what? Your mortgage, for your taxes and your insurance and so on, right? Your escrow. That is going to be our sister company. Most companies sell the servicing as well. So every few years, you're dealing with another company that is going to collect your payment. With us, it always stays with us. You can call me at any time to say, hey, what's going on? Why did my payment change, for example? Or I need to update my home insurance. You can't do that with other mortgage companies because they keep selling the servicing. With us, it's our sister company, and we have direct access, and we're able to assist as well, okay? And also, this came to mind. If your monthly payment goes up, your mortgage didn't go up. The only reason why your payment would go up is due to property taxes going up or your home insurance going up, not the mortgage. Okay? So we are renting you our portion of the home to do what you like with the home. Whether, in this case, if you're going to rent it out, it's up to you to find the tenant. We're not going to find the tenants for you. Same thing. Yeah, no, we won't, correct. We won't be fixing or repairing, right? And the reason is, once again, when we do finance a home, it has to be in livable condition, okay, number one. We do an appraisal to see the value of the home, but also the condition of the home as well. So the house is given to you in livable condition, and any upgrades or fixing you do goes back to you once again, because when you sell the home, you're going to keep the profit, not us. Okay? Yes, brother.
Do you receive any funding from your parent company?
Do we receive funding from our parent company? No. No. They are a part investor, but we don't receive funding from them.
In the investments that you guys, that UIF makes?
No, they have invested in UIF to get us started. Yes, correct.
And after that?
Yes, correct. We're on our own. Yes. So your question, brother, is that if you've signed an agreement with UIF, which is at the closing table, in which we have purchased the home with you. So now we are partners into the home, and you're going to buy us out over a period of time. And now you're saying if you want to break the agreement, is there any consequences for that? Now, I don't know specifically what you mean by break the contract, right? So, yes, that's what I was assuming. But so, for example, so the brother's saying if someone is not able to make their payments, what happens, right? So we're going to go through worst case scenario timeline. So your payment is due by the 1st of the month, and then you have 15 days to pay. After the 15th of the month, if there's no payment, there's a fixed $50 late payment fee, number one. This is different than a traditional mortgage company. Once again, traditional mortgage company will charge you 5% interest late fee for whatever your monthly payment is. So if your monthly payment is $2,000, your late payment fee is $100. If it's a $3,000 financing a month payment, then it's a $150 late payment. With UIF, it's a fixed $50 because from a Sharia perspective, we cannot make a profit from a late payment, but this is the administrative cost to follow up with you, emails, phone calls, the regular mail, and so on. And then actually at the end of the year, we donate that to charity. Keep going, worst case scenario, the $50 is not the big deal, but you have a hardship. You're not able to make your monthly payment. So whenever you're not able to make your monthly payment, give us a call so that we can see how we can work with you. Sometimes we stop the payment, sometimes we lower the payment, sometimes we don't do anything, depending on your particular hardship, right? But you have to let us know what's going on, and then we'll do our best to work with you. If we keep going worst case scenario, let's say nothing can be done. Then in this case, we'll ask you to sell the home. When you sell the home, you keep your promise to buy us out, and you keep the profits from the home. If you keep going worst case scenario, you don't want to sell the home, and there's no monthly payments coming in, then eventually we will follow state law, and the house goes into foreclosure. Okay? In New Jersey, roughly anywhere from 2 to 4 years of non-payment, then the home goes into foreclosure. Okay? Yes? So the first step would be to get pre-qualified, right? You would speak with this gentleman, well, was there. There we go. So the first step would be to get pre-qualified, okay? So you would speak with Mazer, and he will ask you some questions based on the three characteristics, income, assets, and your credit score. We look at those three things. Roughly for every $20,000 to $25,000 of income that you show on your tax returns, you may qualify for about $100,000 in financing if you don't have any liabilities, no car loans, student loan, and credit card debt. We gave you, once you get pre-qualified, we give you a letter. You shop around with a real estate agent, and then once you have that signed sales contract, we will collect your documents. Depending on if you're self-employed, we'll collect the tax returns. If you are employed, we'll collect 1 month of pay stub, W-2, 2 months of bank statements, and your driver's license. It is up to you to find a house, and if you need a referral for a real estate agent, we have real estate agents that we've worked with, especially in New Jersey. Yes, brother. Mm-hmm. Mm-hmm. It's a very good question. So the brother is asking, how do you calculate your monthly payments, right? So we look for a return on our investment into the home, which is competitive to the mortgage industry. So if we're looking for, let's say, a 6% or 7% return on our investment into the home, that is what we use to calculate your monthly payments. Okay?
So,
I'm sorry. Yes.
اتفضل. We'll let him go. Variable.
Oh, I'm sorry. Brother asked, is the payment variable? No, it is a fixed payment. The monthly payment is the same every month.
Okay. And 2 questions on this side. One
Yes.
of them is online and one of them is from the brother. So the brother's asking, based on the UIF website, it mentions that University Bank is like a majority shareholder in, and so maybe just if you could give a little bit of details on who University Bank is and if they are a Sharia compliant institution. So that's the first question.
Sure. So our parent company, as I mentioned earlier, is University Bank. It is a community bank based in Michigan. Okay, UIF is a completely separate subsidiary of University Bank. We are a private company. We have, as I mentioned, University Bank is our majority owner, and we also have Muslim investors as well that have invested in UIF. Right? But in University Bank is a traditional community bank.
Yeah, I think the nature of the question was like for the funds that maybe, I guess, or the agreement between University Bank and UIF, is it like a riba-based transaction? Obviously, I would assume no. But is it a riba-based transaction for them kind of funding UIF as an institution?
That's a very good question, and I always look forward to that question. Alhamdulillah. It's a very good question, right? So if your parent company is a community bank, does that mean your dealings with them is haram, right? Just to put it out there. And the answer is no, we don't have any interest dealings with them, right? For example, let's just say we go back to the halal pizza joint that me and Brother Omar co-own virtually, right? So we have this halal pizza joint, and let's say across the street, John owns a bar, completely haram, alcohol. There's no question about it. John comes to buy my halal pizza. Can I sell him my pizza, even though I know his money's from alcohol? Yes. Why? Because my dealings with him is in a halal way. Another example, we go to Walmart, we buy stuff on Amazon. Do we ask them where they got their money from? We don't. Why? Because our dealings is in a halal way. Similarly, if you're renting a house now, right? You rent the house, you pay the landlord rent for using his or her home. Most likely there's a mortgage on it, an interest-based mortgage that they used, right? The purpose why I'm saying this is that 2 things. One is that our Sharia Supervisory Board has reviewed our transactions from beginning end to the end to make sure it's Sharia compliant, first and foremost, and that gives me a peace of mind, right? Because I need to make sure my earnings is halal, right? This is important. It's not just a business transaction. Secondly, as well, from your perspective as well, your dealings need to be Sharia compliant. What happens afterwards is generally not a Sharia concern from your end, but we make sure it is halal as well, dealing with having investors as well. Right? So we don't borrow any money, there's no interest dealings from that.
نعم. الله يبارك فيك.
وإياكم.
And then اتفضل.
Just to conclude that question, you don't pay that when you deal with a university bank. How you deal with them, how you use their money, what they're going to earn from that.
Sure. No, they're investors, but they get a portion of our profit, right? They have ownership. Let's just say, for example, you have ownership in Apple stock, for example, right? As the company makes more profit, you share in that profit as the stock price goes up. Similarly, if we make more profit, then our parent company, who has majority ownership, makes more profit. If we make a loss, they also take on a loss as well. But there's no lending interest payments or anything of that sort.
No. Allah barik fik. And then we had one question that was online, and I believe you had answered this question before, so forgive me, but it's a question that came in from one of the viewers online.
Sure.
The question is, if there's a house, for example, worth $1 million, and the buyer pays 10% down payment, meaning UIF would cover 90% or $900,000. It's the exact question, where exactly is UIF getting the funds for the transaction? So it's the question that we pretty much just asked.
Pretty much, yes. I mean, we have our own funds and we have deposit accounts that we use, right? So UIF does have its own funds. We have, several, tens of millions of dollars that we have in order to invest in these transactions. Yes. Do we own, well, every property that we, well, the properties that we finance, we co-own, but we don't own any standing alone ourselves. So you have to go through a real estate agent.
And then one more question. I'm
Yes.
sorry. So we mentioned the deposit accounts, and you mentioned how there would be like sort of like a profit that you would earn on the money that you have obviously invested in that account. Of course, it can't be a fixed rate because that would be interest. But what's like the typical range of what a person can expect from those accounts?
So it's called an anticipated profit, okay? And the anticipated profit is about 4%. That is currently the anticipated profit. So we've been doing this for 20 years, okay? And so we have a track record of what our profits have been. So we're comfortable to say that there's a very likelihood of you making around 4%, right? So if we make 8% profit, we give you 4%, we keep 4%. If we make 6% profit, we keep 2%, we give you 4%. If we make 4% profit, we give you 4%, we make 0. If we make 2% profit, then you get 2% and we get 0. Okay. Yes, brother.
Just to confirm, the loans or co-investment that you make are not funded by interest-bearing deposit accounts at University Bank.
That is correct. Our funding has no dealings with university banks' separate deposit accounts. That is correct. There is no interest that we get from them on it. Absolutely correct. Yes, brother. Yes, brother. I'm sorry, you were asking, brother, in terms of risk? Sure, so the brother was asking the similar question as before in terms of recourse. If there's non-payment, what happens? So the difference is that if a person can't pay and they owe more money to the bank will still come after them for their other assets, whether they take their car, they garnish their wages, and so on. With UIF, we don't do that. Our transaction is based on the home that we own. So if the house sells for less, then our relationship ends with you at that time. So there is no, it's a non-recourse contract that we have. And we take, correct, yes. Yes, brother. So how many months do we look for income? So we look, in order to qualify, there's a 2-year employment history that is needed, okay? 2-year employment history that is needed. If you are self-employed, we need, if you've been in business for 5 years or more, self-employed, then usually we only need 1 year, most recent 1-year tax returns. If you've been in business less than 5 years, then we need the most recent 2 years tax returns. If you work for a company, then it depends. It could be we just need only 1 month worth of your employment. Sometimes we may need 6 months. It all depends on what's going on, okay? For example, I graduated college and I just started a new job, then I can use that income right away, okay? Now, I was working 10 years ago, and then I took a year or 2 years off. I traveled overseas to visit family, and now I'm coming back. So now I may need 6 to 12 months of work history to show stability of income. Okay, so there are some unique situations from that. So the key thing is 2 years employment history and stability of income. Okay, inshallah. Yes, brother. Mm-hmm. Mm-hmm. So you want to use the equity in your home that you have now for whatever you'd like to do, whether invest again or do whatever. Unfortunately, we don't currently have a home equity line of credit product. Okay, we don't have that. We do have a cash out product, but it's all the money at once. Okay, so right now, today, we don't have it. Any other questions, inshallah, before we wrap up? Yes, brother. Mm-hmm. The rest of the loss, yes, correct. That is correct. Mm-hmm. Sure, so the brother asked a very good question. Certain states or certain counties have different grant programs that will allow you to use for down payment or closing costs. Sometimes 5,000, I've seen them up to 100,000 in some cases. Some of them we work with, some of them we don't. It depends on what their requirement is, okay? So depending on the particular program, the one that you're mentioning, I'm not sure if we are a part of that. We could look into it to see if we can. We have to look to see that their agreement, that there is no interest in there. So a lot of the grant, yeah. So it's possible we might be able to work with them. So if you want to reach out to Mazer and then see if we could. You know, we've worked with many in the past, and some we have and some we haven't. So definitely let us see, inshallah, if we can, why not? Inshallah. I will take these two questions and then we'll wrap up. Yes. Mm-hmm. Monthly. On the savings account, you'll get a profit payment monthly, correct. It's going to vary, but our anticipated profit yearly is 4%. But approximately. Well, it's usually we give you like a year estimate of what it could be. So we're around 4% this year. Yes, brother. We don't have any affiliation with VA loans or FHA loans and such, but our pricing is competitive, and we do have some, depending on the income in certain areas, we do have $2,500 grant money. In some areas in Michigan, we have up to $10,000 of grant money that we directly participate in as well. So we have many that get in New Jersey, many who've worked with and gotten up to $2,500 as well, and also competitive pricing. Mm-hmm. Yes, you can. Mm-hmm. The housing voucher, not the rental voucher, just to be clear. There's two different, Section 8 has two different vouchers. One is if you just want to rent, but then there's another where they give you some money to buy a home. That one we can work with, but not the one just for rent. Yes, brother. Yeah, absolutely. If you go on our website, you can start opening up a deposit account, or you can contact Mazer and he can put you in touch. Either way, inshallah. Inshallah. Yes, brother. Yes. Uh-huh. No. No, not at all. Mm-mm. Because that's you're paying yourself back. Yeah. So it's not used, correct. Inshallah. Yes. No, there is no prepayment penalty. We've had people who literally a month later paid it off, right? For example, they own a home, they're buying another home, but they don't want to wait to sell the home, so they buy the home, they sell their first home that they had a month or two later, and then they buy us out a month or two later. There's no prepayment penalty, there is no, just whatever our ownership is left, that's it. Inshallah. Yes. That's a very good question. This is a personal question he asked me. Do I think it's a good time to buy a home? Well, it is always a good time, but it's not always a good time, right? And this is the home prices are extremely high. Okay, it really is very, like, obviously growing up, when we thought of $1 million home, you thought, wow, mashallah, it's a mansion, right? But now you go outside $1 million, you're like, astaghfirullah, where's the rest of it, right? Home prices are very high now. But they've come down a little bit lately, a little bit, but still, they're still going up. The reason is that most people bought homes several years ago during COVID. And during COVID time, there was low rates, interest rates, 2%, 1.5%, 3%. A lot of people got those rates, and so they don't want to sell that house and now go into a market that's 6, 7%, right? So they're keeping those homes. So until majority of people sell, which they're reluctant to because they have lower payments. So those same people, if they were to get a mortgage today, their payment would be $1,000, $2,000 higher. So they say, why am I going to move, right? So if you're going to buy a house and you plan on living there for 5 to 7 years or so, then think about it. Some people, they have a short term. I want to be there 2, 3 years and then I want to move. I wouldn't advise that at all. I think that's too risky, and I personally would not do it. Long term, think about it. Some people, they're using this terminology, which is marry the rate. Marry the house and refinance the rate, or something to that effect. Meaning, if you want the house, make sure it's the house that you want. Hopefully prices, mortgage rates will go down in the future, and then you can refinance, right? This is an option if the market rates go down. What if they don't go down then? Then you have the same. So you have to think about it, and I want to tell you everything so that you can make your best decision. Now, they were trending downwards lately. The past few weeks, they were going back down again, which was good. But then all of a sudden, they started to go back up again, right? So, think about that and see if you could afford the payment comfortably. You don't want to really have high payments and every month you're struggling. You don't want to do that, right? Just for the home. And yes, renting is expensive too. Renting is not cheap anymore, right? You used to get a one bedroom for $1,000, $1,200. Now it's $2,400, right? But, inshallah, pray istikhara, and may Allah, inshallah, bless you and your family with the best of homes, and all of us the best of home and Jannah, inshallah. Last question. Yes.
Mortgage was FHA loan. They helped them out with, I think, almost about 18 months was deferral for payment. Didn't have to make any payment. Would UIF will do the same thing or something equivalent to that?
Absolutely. So, yes. So
18 months, it was actually...
Yes. So during COVID, if you didn't want to make your payment, all you did was you called up and you said, I need to stop my payments due to COVID. That's it. You don't have to say you lost your job, I'm in a hardship, nothing. All you did was call, right? And your payments were stopped. And it were more than 18 months. I think it was up to 24 months of non-payment that we had. I know it was about at least 24 months, maybe if not more, to be honest with you. So yes, we had the same thing as well, inshallah. Jazakallah khair. Wassalamu alaikum.
Jazakallah khair for Brother Wissam for the wonderful presentation and his patience with all the questions. MashaAllah. So just, Jazakallah khair to the brother. Of course, he has his cards and his contacts if anybody would like to get in contact with him, inshallah. And then more of a general announcement. Next Friday, we're going to have another workshop or presentation, but it's going to be on Islamic wills. How to set up an Islamic Sharia compliant will in the state of New Jersey. Barakallahu fikum wa jazakumullahu khair.